solo 401ks versus self-directed IRAs.
This is a big debate. Do I do a solo 401k versus a self-directed IRA? So we're going to debate it today. Angel in the studio, you're going to flip a coin. Do we have a witness? Who's taking what?
You got to trust me on this one.
Okay. All right. Okay.
Hey, Siri.
Matt, are you calling it or am I calling it?
Yeah, I'll call it then.
Okay, all right.
Since I'm in the studio. Okay, all right. I'm calling heads.
Okay. Hey, Siri. Heads or tails? Tails.
Oh,
I am going to take the solo 401k.
okay.
So tell me what is so great about an IRA different
All right,
from a
here's
solo
what
401k.
I love about the self-directed IRA. Now, of course, we're talking about self-directing on both of these. Both of these account types, you can invest in private assets. You don't just have to buy a publicly traded asset. So we're on an equal playing field there. All right. Okay. So that's first thing. Of course, you're listening to the Directed IRA podcast. You can self-direct both. But here's what I like most about the self-directed IRA and why I think it's better than a solo 401k. Anyone can do this. Anyone can do a self-directed IRA. Okay. All you have to have is earned income. You can have a job. You can have just a business, some self-employment income. As long as you have earned income, I can put contributions into my self-directed IRA. I could also roll over money. Maybe I got an old employer 401k or I got a brokerage IRA. That's why I love the self-directed IRA. And that's why it is the most popular account that we do is a self-directed IRA.
Now, I will throw this out too, because on your behalf, as Matt said, anybody can do it with earned income. Even a spouse married to someone with earned income is allowed to put money in the IRA, even if he or she does not have earned income. So I just wanted to throw that out.
Point. Thank you.
On,
Thank you for
on
your
behalf.
intellectual honesty.
All right, or number two argument, whatever. Okay, so on behalf of the solo 401k, what I like better than a self-directed IRA is you can contribute more on top of your IRA. So you can still do an IRA, but now I can double down and I can put even more money in a solo 401k. This year, 23.5, over 30,000 if I'm 50 years or older. And I can do matching in my small business. And
yeah, you're getting up to 70K total.
Yeah, 70K total. I could talk about the backdoor Roth solo 401k, which I think is on the same vein that I can put away a lot of freaking money. That's my point. Yeah. First and foremost, if you want.
I have to concede that there's nowhere else to go on that one, but to just concede. What are you going to do there, Because in an IRA, right, I can put $7,000 a year in, Obviously, if you're over 50 or older, you can do 8, but $7,000 a year in new contributions versus the solo K, I can be doing $70K a year. That's like 10 times more that you can put in as new contributions, but many of you may not qualify. Like, I can't do a solo K, all right? Some of you listening may not even be able to do a solo K. So this might not even be an argument for you, because in the solo K, you must be self-employed with no other employees other than your business partners or family. So if I've got a business with third-party employees that are full-time, work for me over a year, I can't play in the solo K game.
I mean, I like your number one, that anybody can do it. And my number one is you can put away a lot of money. And I will concede that you have to have a business to be able to do this. And so that definitely is the drawback in comparison to Matt's first argument. And he admitted too that the IRA cannot put in as much. Okay, you got another one of why the IRAs are so good?
Before I do, let me just make one other little note here, because I made it earlier, is most people just on this contribution topic that are doing a self-directed IRA are not doing it for their $7,000 annual contribution. They've already got money in, right? There's $17 trillion in IRAs already. They've already got money in an IRA over at Fidelity. They're coming to a self-directed IRA so they can invest in an alternative or a private asset. They want to do real estate. They want to do crypto. They want to invest in a private fund. They want to buy precious metals. And so they're not necessarily worried about the contributions and how much new money they can get in. They're like, I already got IRA money or an old 401k. I just need to get it to an IRA. So I don't want you to think that like, well, that's not great for IRAs. Well, the solo K is more of like if you're focusing on, I need to get more money in. And we have so many
Whoa. Now you're putting words in my mouth.
Hey, I'm cutting in here because I want to make sure you know all the stuff I'm talking about on my YouTube channel, investing in alternative assets, whether it's real estate or private funds or private equity, oil and gas, crypto, saving on taxes, all these concepts I love and I talk about here. I want to let you know we do this at my company, Directed IRA. So get on over to directedira.com/call and book an appointment with one of our self-directed IRA specialists that'll help you understand how to take control of your retirement.
I can roll over. I can open a solo 401k and I can roll over old IRA money into it. I can roll old 401k money into it. So I think I want everybody to know that it's not just a solo 401k because I want to double down on contributions. I've got some other, tricks up my sleeve.
Okay, I got
here.
one on that. Let's go. I got one on that. If you have a Roth IRA, let's say you got a Roth IRA at Fidelity, you can't do a Roth 401k. Even if you have a solo K with a Roth account, that Roth IRA cannot go into your Roth solo K.
Yeah, that's the Roth problems, not mine. Because in my solo 401k, I could make a Roth conversion. So I can turn any money I want into Roth.
I know, I'm just saying.
And I could kick it out to a Roth IRA too if I want.
You can go out, but you can't come in. So if you're thinking about a new account, I'm just saying, if you're a Roth person and you've got already Roth IRA dollars at TD Ameritrade, you don't even have the choice. Even if you are self-employed, you can't roll that Roth IRA into the Roth solo K. You could start a new solo K and do new Roth contributions. You can even move Roth 401k money into the Roth solo K. But Roth IRA money always stays Roth IRA money. So I can do a self-directed Roth IRA and transfer over my existing brokerage Roth IRA to my self-directed Roth IRA.
All right, now it's commentary time. Or maybe this is the end of round one in the boxing match or the cage fight.
Right.
Here's what I want to tell everybody. We need to pause for a minute. You can already see there are pros and cons to both. And we are not trying to overwhelm you listening today, going, holy crap, these guys, they're just going out, and we want it to be fun. And for some of you to see, oh, okay. And you may even want to re-listen to this if you don't know those differences. But the point of this is not to confuse or overwhelm. We may have a big reveal at the end that both are great, and you may want both. Here's what I like about the solo 401k people. You can borrow from your solo 401k. So once you get some money rolled in there, you put a contribution in there, who knows what, right? The money's in your solo 401k. You can borrow 50% or 50 grand, whichever's less. So 50% of the value. Say your IRAs, or say your solo 401k is worth 200 grand, you can still only borrow 50. If it's worth 80 grand, you can only borrow 40. So it's 50,000 or 50%, whichever's less. But the beauty of that is you're paying back that money with interest back into your 401k, tax-free interest going in, and you may be even using that loan for business purposes and writing off the interest payment that's going back into your 401k tax-free. Can you borrow from an IRA, Matt?
Can I just switch teams just for a moment here? Throw me the ball. Let's be on the same team here for a second because that one is pretty awesome.
Yeah, you're like...
Yeah, in the IRA, you can't lend yourself money. That would cause a prohibited transaction. But yes, there is this exception, of course, in the solo K. Definitely a perk of the solo K, why it's better. And I've seen that a lot with, people leaving corporate America and maybe, they've got the old 401k there. They're starting a new business or they're doing consulting or whatever it is. And so they start a solo 401k. But I need some startup capital. I can at least get 50K. I can tap that 50K, maybe self-direct the rest and invest it, but tap into the 50K to get that business off the ground or get some startup capital or personal funds. You do pay it back over time, otherwise it's a distribution. So I do love that one. I wish you could do that with an IRA, but you sadly cannot. So let me hit one on the IRA side.
Okay, I want you to go to the 60-day because I have a comment on that. So before you go on, let me just say too, I actually have learned a lot about this strategy lately because I want to point out to everybody, you can still do the 60-day rollover out of a 401k, but you have to withhold 20% in taxes where you don't have to do that in an IRA. So it's kind of a pain in the butt not something you want to deal with on your tax return and trying to get that money back. It's a mess. So I don't think the 60-day rollover is a practical solution in a 401k. If you need that money for 60 days, you got to kick it out to an IRA and do it, and then kick it back into the 401k, unless it's a Roth, and then it's even worse. So I just don't think the 60-day rollover is a good fit for the 401k, even though some of you out there go, well, hold it, you can do it there. It just practically doesn't work. So I have to concede. I want to say that 60-day rollover in the IRA.
I like it. A lot of this comes down to some of the geeky tax code stuff and the rules the IRS has. So forgive us, we're tax lawyers, but these things matter of knowing what you can and can't do and the pros and cons between them. So, and just a little tip with IRAs, you can elect out of withholding when you take distributions, but 401ks you can't. That's the genesis of why that 60-day rollover works a lot more slick with an IRA. But be careful. That's just my note on that. I have had people burned on that it's like, they're 65 days in. They're like, can I get it back in? I'm like, nope. One thing I'll say with the IRA is I can do traditional or Roth, right? And so if I've got traditional IRA dollars already, I can do a traditional self-directed IRA. If I got Roth IRA money, I can do a self-directed Roth IRA. You can do new contributions. You can do kids Roth IRAs. for your kids to get them going that can be self-directed. The account options are a lot easier and it's less expensive too. A solo K is going to cost you more. A self-directed IRA, you don't need a 401k plan document. It's just some account forms, an annual fee, and you're off to the races.
The solo 401k does have more features, but you got to know how to use them.
Yeah. So for example, let's just hit a couple of things just so you know, when you're doing a solo K, right? You're self-employed, no other employees, you set up this solo K. You're like, all right, I'm doing my contributions. Okay, well, your account better be involved because those need to be on your tax return. Your employee contributions are on your W-2. The employer contributions, any of that match is going to be on the company return. When you're making contributions to your IRA, we do that for you. It's on your 5498, your IRA custodian does. But contributions in the 401k world are on your payroll and on your company return. We don't do those for you. No retirement account provider does that. So you got to have your accountant, your payroll company coordinated there, a little more work on your end. But you do, like Mark said, and I will concede this, since you're the trustee, you can just do what we call a trustee checking account without an LLC. So you can open a checking account in the solo K's name where you're signing on the checking account because you can be trustee of the 401k. You can't be trustee of your IRA. You have to have a custodian like us be trustee of your IRA. That's why you need the LLC to get that checkbook control. So, and if you're like, what are these guys talking about? We got other episodes on the IRA LLC and more stuff on the solo K that you can binge on. But that is a nice feature we've seen a lot of clients like in the solo K. But like Mark said, there's more work. And I think that's a pro to the IRA is if you're like, guys, I already got IRA money. Even if I am self-employed and I can qualify for the solo K, the IRA is cheaper, it's easier, the administrative burden is less. And frankly, we're doing all of it for you as your custodian. Whereas when you're doing the solo K, your accountant or payroll company's got to be more coordinated on what's happening. One other thing I'll note just here that we didn't mention is the solo K, there's no UDFI tax with leveraged real estate. If you know, you know what that means. If you don't worry about it. We got other stuff where you can beef up on that. But there's a nice little feature in the solo K. I'm scoring some points on myself here. But what we've seen is, quite honestly, a lot of our clients that are self-employed that can do the solo K and the Roth IRA.
Matt, I love this topic. And I just want to say thanks for being such a pioneer in this industry. And everyone out there, Matt's second edition of his book has a whole chapter on the solo so that you can really dive in and kind of understand those nuances. We really encourage our small business owners that are solopreneurs to be thinking about this in their trajectory. Because you're going to go through this startup phase, kind of an optimization and systemization phase. As soon as you start making money and scaling, this has got to be on your radar. And it's just so important.
And you can still have the day job 401k and the solo K if you got a side hustle. There's a lot of other cool things you can do. But the Roth IRA and the self-directed IRA is the most common account because anyone can do it. And if you got existing IRA dollars and brokerage stuff, or, in the stock market, let's just say, opening up a self-directed IRA, whether it's traditional or Roth, is the most easy way to get into self-directed accounts and investing in assets you know and believe in. So hopefully you found this helpful, and make sure you're subscribed and make sure you're following the show. Please give us a good review, share it with your friends and family. Until then, stay calm and self-direct on.